think you got Yeah, you're good.
Okay. Good afternoon, everyone. If we could have a seat, let's get this meeting underway. We have places to be, and I know everybody's very busy. At this time, I'm going to call on our good friend, Representative Douglas, to ask a blessing over this proceeding.
Don't name anybody in your prayers.
This is a hard group right here, guys, and ladies. We bow our heads. Father God, thank you for this time of fellowship. Thank you for these men and women that have come to do the work. Let it be pleasing in your sight, and give us clarity. And may it be inclusive to everybody. May we all say amen.
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 Thank you, Representative. At this time, we have our quorum, and last year we passed out our rules, and I think we're good now because we're in the second year of the biennium. So at this time, I'm going to ask our chairman, Bruce Williamson, if he will go over our housekeeping bill that we have each year is HB 876.
Thank you, Mr. Chairman, members of the committee. Have with us today Bo Pierce, is the attorney for the Georgia Department of Banking and Finance, and I bring before you House Bill 876 LC 550142. Well, folks, this is my 11th year carrying this banking bill, and it's typically referred to as a housekeeping bill, but frankly, for the last 10 years, it's been anything but a traditional housekeeping bill. Over those last 10 years, we've literally modernized our banking code in Georgia. We've streamlined it. We found efficiencies. We got rid of unnecessary regulations, lots of different things. But and I want to make sure we've modernized the money transmission laws, as foreign bank laws. We've done a lot of things that we've been real patient and understood and went over in pretty much detail. But this year, it really is a traditional housekeeping bill, so it's going to be correcting cross references, wording, etc. It's going to touch on various different aspects through the entire code, including credit union legal lending limits, credit union fields of membership, like basically the membership rules, ability to call special meetings at a credit union, clarifying the term officer as it relates to credit unions, bank formation changes, which is simply right now when you start a new bank, it asks for all the organizers to list their home address. Well, we're not going to make them do that anymore. We're just going to say list the county in which you reside. With all the problems going on in the world now, you don't want to be listed. None of us want to list our personal home addresses on anything, that's for sure. We're going to streamline some of the notices and filings with the Secretary of State. It updates the definitions of subsidiaries. It does include updates to the Merchant Acquirer Limited Purpose Bank Act, which is particularly important to all our fintech community. You've heard of Fintech Alley. Over close to, I want to say, 80% of the world's credit card transactions are cleared through firms in the greater Atlanta area. There's about 200 firms in that space. It eliminates the requirement for exempt mortgage companies to register with the department because it's superfluous. It's just not needed. It modernizes the exemption for mortgage licensing for certain securitized transactions. And creates an exemption for loans held in trust for securitization or other transfers in the secondary mortgage market. And basically, it's just simply when loans are originated in Georgia through the Mortgage Bankers Association members, all those loans are pooled, basically put in one big package, and then sold into the secondary market. Fannie Mae, Freddie Mac. So this streamlines that space as well. And it provides a specific mechanism for the amount of retained in closing fees by the Georgia Installment Lenders Association. It just codifies what we've approved before. So in addition to that, it's supported by the Georgia Bankers Association, the Community Bankers Association, the League of Southeastern Credit Unions, the Mortgage Bankers Association of Georgia, Georgia Financial Services Association, and the Georgia Installment Lenders Association. So that is the overview of what is really a housekeeping bill this year. I'm happy to go through it line by line and page by page of all 44 pages if it's the will of the committee.
I don't think that's necessary.
But
Let's just ask, we can have a few questions, but like you said, Mr. Chairman, I know I have not been approached by any organization that has had any qualms with this bill this year. I know last year we had some folks that came to see us and wanted to make some changes, and we fixed that. Mr. Fears, I know I have spoken with you, and I don't think you had any qualms with anything or thought there were any changes that needed to be addressed. Is there anything you wanted to add to what Mr. Williamson has provided for us?
I have nothing to add.
Okay, we do have a question, 18, please.
Of course you have a question, Mr. Chairman.
Go ahead.
Maybe it's for Mr. Fields. You just spoke about streamlining the mortgage payments. You know how we put them in the pool and they get sold 2 or 3 times? Because I remember my mortgage was sold 3 times. When you say streamline, what exactly are we doing now? Are we selling them less or?
So what we're doing is there's exemptions in the Georgia Residential Mortgage Act from entities that are not required to be licensed. So right now, if you hold a pool of loans for 7 days or less, and you don't, then you don't have to have a license. Because the idea is that entity is not going, they're not going to service the loan, they can't foreclose on it. So what we've done is we've expanded it from 7 days to 14 days, and we've expressly put in there that they cannot service the loan, because that's really where the harm comes to the consumers, right? When the loan is either originated or who's servicing it. We also put in another exemption as it relates to trust. And if the trustee of that trust is a financial institution that's regulated either by, the state banking agency or the federal government, and so there's oversight there. And if they also are not going to service the loan or foreclose, or have the ability to foreclose on the loan, then that also has been expanded for them as well. So they're exempt and don't need to have a license as well. So those are the 2 changes in that area.
Thank you.
Thank you, Representative Frazier. And next will be Floor Leader Wade.
Thank you, Chairman. Just a real quick question. One of the things I want to confirm is always, and I love to pick on my regulator friends as a banker, a lot of times when we do these cleanup, is there anything that when you were going through this that you thought that is cleanup is going to be materially impacted? Is it going to make anything materially better for all the community banks and credit unions by fixing some things? Is this fixing something that was notified since last session that's been a hurdle? Is there anything in here through that cleanup? Is it more just nomenclature and language, or is there something that we realized, hey, we just missed this a little bit, it caused a problem and we're fixing it today?
Yeah, so a lot of it's nomenclature, but things come in from the industry. So, for example, the change to the loan production office limitation, right? So, how the language was put in is that if a loan, the funds from a loan that's been closed cannot be dispersed from a loan production office. We tighten that up to really reflect what the federal government and what the FDIC standards are, to say that those loans can't be dispersed to a borrower, but they can be dispersed to third parties. So that is one example of a cleanup.
And a follow-up to our friends in the credit union business, that we, if you recall, it's particularly helpful to our smaller credit unions, but we gave them basically $50,000 ability to make up to $50,000 loans with the proper financials in place for unsecured loans. And the department, with the industry support, is raising that from $50,000 to $150,000. So things that are working well, improving, giving more flexibility to our smaller credit unions to be able to offer relatively smaller loans to their members is a good thing. So, but that's cleaning up where things are working and just raising the cap some. Is that a fair way to put it?
And we saw that was impacting our smaller credit unions, and about six or so that had less than $20 million, and so that this would enable them to continue to make unsecured loans without having to securitize them.
Thank you. I have one more, 14.
Mr. Chair, at the appropriate time, I would like to
Now's the appropriate time.
do pass.
We have a motion do pass. Do we have a second? Any other questions? All in favor, say aye. Aye. All opposed? Likes, signs have it. Thank you, Mr. Chairman.
Thank you, Mr.
Next, we have Mr. Morgan that wanted to do a brief overview for us. Mr. Morgan, thank you for the cufflinks.
Yes, sir, Mr. Chairman. Thank you. I'm Jay Morgan. I represent the American Transaction Processors Coalition. We have two guests from the industry that are going to come up and to the table here and just tell you a little bit about the payments industry. As was mentioned in Leader Williamson's remarks, payments industry in Georgia is roughly 40,000 jobs and counting. It's a very vibrant ecosystem. A lot of you guys have been exposed to it before. Very proud this here in Georgia. Also want to recognize Wes Richards, who is the executive director of the coalition. He's also here with us today. Mr. Chairman, thank you for this time. And this time we'll turn it over to our two panelists.
Thank you.
Yeah, I'm not sure who's going to go first.
I'm gonna go first. Was
Yeah, that's fine.
You're gonna put a deck up or no? Was the deck?
Yes.
Oh, great. Oh, you got it. Okay. I didn't know if it was gonna be up on the screen or not. Hi, I'm Lisa Roberts. I'm general counsel at Stacks Payments. Was gonna give you just.
Everybody has a
down-
handout.
Thank you.
Yeah, speak
I've
in
not
mic.
done this before, so I appreciate the guidance. Appreciate that. So, trying to run this very quickly, the payments ecosystem. If you haven't been involved in this industry, I've been involved about 15 years. There's a lot of vernacular and a lot of players, but it's very important to the state of Georgia. So the ecosystem is comprised of what you would call the card networks, which we all use: Visa, MasterCard, Discover, American Express. And they sit at the very top of the ecosystem chain. Below them are our member banks. And to be a part of the ecosystem, you have to be an FDI-insured bank. So Visa doesn't do business with consumers directly on the merchant acquiring side. You go through a sponsor bank. So you have the card networks at the very top. Then you have the member banks. And those are either issuing or acquiring. The issuing banks is the way the consumer engages with the payment system. So you get your Visa card in the mail from your Wells Fargo bank that then you use everywhere. So those are what we call issuing banks. On the other side, there's what we called acquiring banks, and some banks do both. Acquiring is an odd term to me, but it's been used forever, and it's acquiring transactions. And there's a lot of players that sit under the acquiring side of acquiring banks and the payments ecosystem. So that's the processor, what we call ISOs, and then we get down to the merchant, who is acquiring transactions from the consumers. So if you, so the card networks, we all know what those are, and they set the rules, they provide the infrastructure for the entire system. And so the way they protect themselves is making sure their only members are FDI-insured banks. So they kind of have set themselves up to not have a terrible amount of liability because you have these FDIC-insured banks that are members of the system. And I'm running through this fast. I know you have places to go. So again, member banks, regulated institutions, they can issue cards or acquire cards. The issuing banks, again, that's how the consumer gets into the payment system, is by my card that I go swipe everywhere or use to purchase things online. The acquiring banks, so that's the merchant side. So these are, it's a flexible term. You can have a bank, a processor, an ISO, and a sales agent that are all called acquirers. And so we go in different, depending on what type of entity you are as an acquirer is how you acquire the transactions. But all of us have to comply with the card network rules. Visa, for example, has 1,200 pages of rules. MasterCard, about the same thing. So all of those rules apply to acquiring institutions, whether you be the acquiring bank, the processor, or whoever sits in that chain on the acquiring side. So that's a big piece of compliance for all acquirers. The processors, that's what I think of as the technology piece. It's the connectivity that takes the transaction from the merchant to the card brands, to the issuing bank, and then flows it all the way back through. So that's the technology. And Stacks Payments is a processor and an ISO, depending on the way we do business. So we're a technology payments provider. That's where we sit in the chain. And the ISOs, they're called independent sales organizations, and a lot of folks use them as an outsourced sales force to go sell payment services to merchants. And if you look at, I think 11 is probably the most interesting. That's the day in a life of a transaction. I think this is interesting because there's.
I don't think we just have a 2-page.
Oh, okay. Then this would be hard to follow. It's a lot. Okay, I'm sorry. I thought you were. Okay, I'm happy to redo it anytime you have more time. But yes, absolutely.
Yeah, some of us are old. We can't hear.
Let me run you through this because a transaction, right? When you go anywhere where you're going to swipe a card, there's two pieces of the transaction. Me as the consumer, I care about my card being authorized so I can walk out the door of Old Navy with my stuff, right? So, or I can order online. That's called the authorization. And the way that transaction flows, me as the cardholder swipes, enters it in, goes to the merchant, and then they send it to the processor. The processor then sends it up to the card network. So this is all the rails that have been created by Visa and all of the processors that the transactions flow. Then it goes to the issuing bank to see if me, Lisa Roberts, General Counsel, has enough money on that card to purchase my sweater. And then it says approved or declined. And then that signal comes all the way back through to the merchant. So I'm standing at Old Navy and it says, on my little point of sale, approved. Then I take my sweater and I head home. That's the authorization piece of the transaction. The more important piece to the merchant is the settlement. When do I get my money, right? It's not immediate. So that's where our partner banks come in because you have to to participate in here, you have to use a bank to settle your funds. They're the only ones that can move money unless you have a money transmitter license. So we partner with banks to do that. And so what happens is the transaction often works somewhat in the reverse, which is that money that was captured out of my account then gets sent back through the system to the merchant and settled at the end of every day so that they get their credit card proceeds daily, mostly daily, so that at the end of the day they batch out and then the next day they have a deposit into their account of all of the credit card proceeds for everything that was bought via credit card the day before. So that is kind of the life of a transaction. Stacks we process 23 billion in transactions for about 30,000 merchants. We're somewhat of a small player, but that we sit as a processor in that flow. And what's interesting about our business, and you've probably seen it in your daily lives, is, you have all these pieces of software that folks buy and use for all kinds of niche things, whether it be signing up my kids for their soccer team, but then or chiropractors' offices that have very bespoke ways that they do business. So you have all of these software vendors that have created these pieces of software to sell to these players across all. I mean, I can't even tell you, some of our customers have really creative pieces of software. But then you've sold the software, and how can I increase my revenue? I'm selling this software, but what else can I do? And what they've done, it's called embedded payments, integrated payments. So we plug into the piece of software so that I can pay my dues for a soccer tournament, so that I can buy things online. So I'm not just offering the software, it's the payments that are embedded in there too. And then these software providers get additional revenue from that. We share the revenue from those transactions with the software providers. So that's one way you see payments. They call it embedded payments, integrated payments, and that's somewhat new over the last decade as well. And it's a way to increase revenue for software providers and also for payments companies.
Thank you. Would you like to speak? In the interest of time, could you get
Absolutely.
us a handout that I can pass out to my members?
It'll be easier to read.
Yeah. That way and if anyone has any questions, they can contact you, or our next banking meeting, we can go over. But we have a time crunch, so if you would like to proceed.
Sure, I'll speak fast. Nathan Ottinger, Georgia Banking Company. I run our payments and technology group within Georgia Banking Company. Georgia Banking Company is a bank based here in Atlanta, about $1.6 billion asset size bank. The majority of the clients that I work with, and this is a specialty unit within Georgia Banking Company, are companies that do high volume payment activities, both here in Georgia as well as around the country. Some examples of that high volume payment activity are payroll payments, rent payments, medical payments. Those are the types of payment structures that our clients are doing through Georgia Banking Company. These are mission critical payments that our clients are doing. And you think about the instance of payroll companies. Our team has done this at scale, and we have paid on each and every payday over 2 million people kind of around the country with those payroll activities running through our bank. These are payrolls for mortgage payments, to make mortgage payments, to buy groceries, to pay for college, to buy an umbrella. These are the types of things and types of payment activities that Georgia Banking Company does for clients. This is something we take very seriously. We're very proud of in terms of being able to do that at scale. Would like to use the balance of my time just to bring forth just a couple of ideas and considerations for this committee. First, our clients require and demand that our bank operate in a safe and sound manner. And strong compliance infrastructure as we make payments on our clients' behalf is extremely important. This is core to what we do and fundamental to what we do. But banks of our size, and we're about $1.6 billion asset size bank, continue to grapple with the requirements of clients asking for new payment capabilities and new payment modalities. And we are allocating expenditures within our bank between innovation and compliance and regulatory. So I would just kind of bring that as a topic of discussion. That is a ongoing conversation within our organization of how we do that balancing act. Second, I know this item's a purview of this committee is around money transmission licenses. And an item of guidance that I would provide is to ensure that the review and oversight of MTL processes remain in line with the objectives of consumer protections and safety and soundness. Extending the reach of MTL requirements to businesses that only have tertiary kind of money movement needs as part of their business model can reduce activity and kind of reduce innovation. So I know this was part of kind of the last session's activities, but I would just continue to kind of bring that forth as an item to consider. Finally, I would like to comment on the importance of the payment and technology industry in Georgia. Our CEO is a fifth generation banker, so our banker here in Georgia, and so our roots run deep here in Georgia. And so what I'd like to say is the idea of working with payments and businesses that are born and built in Georgia is core to who we are. And it was cited just a little while ago that 70 to 80% of payment card transactions run through Georgia-based businesses. It's the desire of our bank and others in the payment industry kind of throughout Georgia is to continue to lead the way for new and innovative payment modalities. And as commercial and consumer transactions continue to evolve, that's going to be kind of where our idea and where our thoughts are. So thank you to the committee for your time today, and welcome any comments and feedback.
Well, thank you so much. We appreciate y'all being here today. Committee members, thank you all for being here. I know we have somewhere to be, but in 2 weeks we're going to have another meeting. And at this time, I would like to adjourn the meeting. Thank you all for being here.
It was speed read. Yeah. So, no, it was good. I mean, you said it right from the outset. I mean,